Hello, today we are going to solve Jan 2023 paper question number 5. Cutprice drinks are in business buying and selling canned drinks, and they use FIFO method of inventory rotation and perpetual inventory valuation. So they have given some information on 31st December 2022 regarding the purchase and the sales of the inventory. So let's start with the first question, part A, 5x for 5A. Explain the terms inventory rotation. Inventory rotation refers to the physical movement of the inventory in which the oldest inventory will be sold first to avoid any deterioration, or the wastage. Then perpetual inventory valuation. In perpetual inventory valuation, inventory would be valued after each receipt or issue using an agreed valuation method such as LIFO or FIFO method. You will use it and you will issue the receipt or the purchases. Then calculate the value of the closing inventory at 31st December 2022 using the FIFO method. So let's calculate. So first, the opening inventory balance, we can see that on 1st Jan 2022 there were 500 cases of canned drinks costing £10 per case. So let's start off. Okay, opening inventory is going to be equal to 500 at £10. 500 at £10. Okay, so that is equal to 5,000. Okay, then after that in the March, okay, 1,000 was bought, so that was 1,000 at £11. So 1,000 at £11 was issued. So we have to issue 1,200. Okay, the first one will be issued at 500 at £10, 100 at 10, and then from the remaining below, okay, the remaining is 700. It will be issued at 700 at 11. Okay, 1,000. Okay, this was completely issued, and from here it issuing 700, so you will be left with 300 at 11. Okay, 300 at 11. Then in April to June the purchases happened and it was 1,500 at £12. And then you have to issue 1,200. So first you will issue from the first inventory, which was at 300 at 11. Okay, and the remaining 900 you will issue from the below inventory. So this will be issued at 900 at 12. Okay, updated 1,500 minus 900, okay, which was issued. So I will have the remaining inventory as 600 at 12. Okay, have between July and September the purchases were at 2013. Then 1,500 has to be issued. Okay, 1,500 has to be issued. Will issue first 600 at 12. Okay, the first one in the inventory. Okay, and then the remaining, okay, the remaining 900 will be issued at £13. So this is going to be issued at £13. So the overall you can see it is 1,500 units have to be issued. Now let's calculate the remaining inventory. 1,000 minus 900, it is going to be equal to 1,100. Okay, so now after this, again in October to December, okay, now here we can see it was issued at 1,000 at 12. Okay, 1,000 was issued at 12. So 1,000, it is going to be issued at 12. Now this now 900 has to be issued for sales. 900. Okay, so 900 will be issued from this 1,100 at the top. Okay, at £13 I will issue closing inventory or the remaining inventory. Remaining 200, and this 1,000 at 12 is still going to remain. Okay, now let's add up these two to get the closing inventory. So the closing inventory value is going to be equal to 14 a value of the closing inventory in pounds. Now the next one is prepare the trading account for the year ended 31st December 2022 trading account, right? So now revenue, let's calculate the revenue, okay? Is equal to, okay, all this you have to add up 20. So when you add up all this, it comes up to 80 to 200, right? 80 to 200. Then I will have to calculate, we will have to include opening inventory. It is at 5,000. So let's include it. It is 5,000, okay, plus purchases. So let's add up all these values which is at the purchases. Okay, 2,000 into 30 plus 1,000 into 12. It is going to give you 67,000. Okay, pounds. 67,000 to 67,000. Then you have less the closing inventory. Closing inventory was 14,600. So we have to subtract that. Now let's calculate the cost of sales. Cost of sales is going to be equal to 5,000 plus 67,000 minus 14,600, 7,400. 37. We will calculate 82,000, okay, 200 minus 57, 400. So that is going to be equal to 24,800. Then calculate to two decimal places the gross profit as a percentage of turnover. So the formula is gross profit over revenue times 100. So that is equal to 24,800 divided by revenue was around 80 to 200. So 80 to 200, okay, times 100. 30 30.17 percentage. Okay, now let's calculate the rate of inventory turnover. It is cost of sales by average inventory, which is cost of sales by opening inventory plus closing inventory by 2. Okay, so now let's include the values. So cost of sales is going to be equal to 57,400. So 57,400 divided by opening inventory was 5,000 plus closing inventory was 14,600. So 5,000 plus 14,600, okay, divided by 2. 5.86 times. So trade payables was around 11,500. So let's write here. So trade payables payment period is equal to 11,500 times 365, okay, divided by the credit purchases. The purchases were around 67,000. So 67,000. So the value is going to be equal to 62.65 days. Okay. Then we have liquid ratio, which is current assets over current liabilities. Here we have current assets are trade receivables divided by current liabilities are trade payables and overdraft. So let's write here. So equal to 9,000 divided by trade payables were around 11,500 plus 3,500, okay, bank overdraft. So that is equal to 0.6. Okay. So, and since this is a ratio, okay, how will you express it? This is going to be equal to 0.6, okay, is to 1. Then you have evaluate the business performance and liquidity of cut price drinks using the ratios calculated in D and other information provided. So first one is, we know that the business performance liquidity is ratios or anything which we have to analyze. We have to consider gross profit, gross percentage, rate of inventory turnover, trade payables payment day period, okay, then liquid ratio and bank overdraft. So we have to consider all those from the previous years and write. So let's calculate first what was the gross profit as a percentage of revenue. Okay, previous year it was 19.58 and this year it is 13.17. So it's a good amount of increase in percentage of gross profit to turnover ratio. So that's an improvement in the thing. Whereas negative points for the business, we can see that the rate of inventory turnover, it has deteriorated from 9.2 to 5.86 times. Okay, so this may be due to either increase due to the price increase, okay, selling price increase resulting in improvement in the percentage of gross profit to sales. That's why gross profit to sales has improved, but the rate of inventory turnover has fallen down. Okay, it has deteriorated from 9.2 to 5.86. Then inventory levels have increased from 5,000 to 14,600. Previous closing inventory was just around 5,000. Okay, and now the the closing inventory is 14,600. So, which puts a pressure on the business, ensuring that it can sell all its inventory before the shelf life expires. So, it has to sell all this, otherwise, it will get wasted. Then, the trade payables payment period, it has deteriorated to more than double that of the previous year, from 29 days to now it has become 62.65 days, which means that, okay, so what does that mean? The previous year it is going to put the pressure on the suppliers continuing to supply on credit. You're just taking the credit and you're not paying the suppliers, so which means supplier can get disrupted in the future. Then liquid ratio, the asset test ratio has further deteriorated, okay, from zero point 0.8 to now it has become 0.6, so which is below the yardstick of 1. Okay, and also the business has an overdraft. So in conclusion, business is in a difficult